G'day there. Welcome to the closing bell on the 25th of September. Now, it's actually not the 25th, funnily enough. Due to the long weekend, I've actually shot this on Thursday afternoon. So I have missed 2 days trading in the US. So there is a chance that whatever I say is out of date. But anyway, I'm going to show you how things are looking. And after we've had the week we've had with a bit of strong selling, and then the bounce with a bit of good news out of Evergrande paying some of their debts, which people were wondering whether they would or not, and the FOMC coming out and saying, yes, tapering is coming, but it's still months away. So we saw a bit of a bounce. Now, last week, I did say, I was a little bit wary of where things were looking. And, I think that played out over the week with the strong selling pressure we saw early in the week. So I think that's what I was sort of sensing in the way things were turning down. So I just wanted to show you the S&P 500, how it's looking, because I did write the article in Money Morning, sort of giving you a bit of an outline of what I was seeing there. And I just wanted to explain that to you using the charts, which is much easier to do. And then I'll just go over what we've looked at in the past, which I think are the most interesting markets at the moment, really is that Aussie dollar, gold and oil. And then I'll finish up giving you a couple of stocks in that oil space that are picking up and that I think are getting close to a pretty good move. So let's start off with the S&P 500. You can see here what I was saying in the article was that the weekly sell pivot was in place from a couple of weeks ago. I'll give you a close-up of that in a minute. But the main thrust of the article being that we've got this immensely strong uptrend still in place. So, the monthly charts are all still pointing up, all well above their moving averages, and really nearly as far above the 20-month moving average as I've ever seen, which is one reason why I'm feeling that things are a bit overstretched in that S&P 500, and that we are going to see some sort of sell-off mean reversion event at some point, but not necessarily now. So looking at the week that we've had, we had a sharp sell-off early in the week, and that has tested that 20-week moving average. So that is really the major thing, saying that, there's big support underneath this market with this strong trend. And you'll see that going all the way back to the start of this rally from the COVID crash and then things turning back up, you can see the trend shifting there on the weekly with that 10-period exponential hitting above the 20-week simple. And look at what we've had since. Really, every sell-off that's hit that 20-week or around there has been a point where strong buying pressure has come in. So it's just been this constant process of, look at that, coming back to the 20-week moving average, strong buying pressure out of there. And really, even ever since for the last few months, it's been around the 10-week moving average rather than that 20-week. But here we are again. We've had a sell-off for the last few weeks. Yes, short-term things are looking pretty dodgy, and especially if Evergrande fell over, it may have broken through that 20-week. But that hasn't happened, and it's looking like it's trying to close the week strong. Now, you'll know more than me if you've seen the Thursday, Friday session of what's actually happened. And the point I was trying to make in the article was that, yes, everything's pointing up. Yes, the monthly is strong. But until I see the weekly buy pivot, I can remain slightly bearish on this. So I just need to see, now that we've got a new low in this move, and this is just to show you, we've got the weekly sell pivot, where you've got the weekly close below the highest price. We've got a weekly close below the low of the candle with the highest price in the move, because you'll see here every week we're going higher and higher and higher. There's no weekly sell pivot all the way through there. There's your first weekly sell pivot, was a few weeks ago. That's the idea. Momentum is shifting, even if the long-term trend is really strongly up. The short term is starting to roll over. There's a bit of sign of selling pressure. We then saw another week of selling. So that's now we've got 2 weeks in that move. And then the third week, it really snapped. And we did see strong selling pressure on that week. So really, the short-term pressure is still there. So even though we've bounced, that doesn't mean it's necessarily turning back up and going to fly higher from here. So what we need to see is a weekly close above the high of whatever happened during this week. And again, you'll know more than me. So next week, I'd actually need to see a weekly close above the high of whatever range we have this week before I will turn strongly bullish again. And if that happens, look, we've got the weekly has turned up. We've got the monthly trend incredibly strong. We've just retested the longer term support and the buying pressure's there. So if we get that, all the boxes are ticked and off to the races we go again. It could be new all-time highs very quickly, no doubt. But just the major point being, we've seen some pretty strong selling pressure. It is out there. There are some concerns. We are heading towards tapering. The Evergrande situation isn't completely fixed. So don't get fooled, I guess, by this very short-term buying we've seen, and just wait for confirmation next week before you get too bulled up that this thing isn't turning down. Because what we could see is, early buying next week, and then the selling pressure could come back in again. And, this weekly downtrend that's slowly developing could continue. So that was a major point of the article, was to say, yes, everything looks great. It's bounced. Evergrande's okay. FOMC isn't freaking us out just yet. So you're probably going to see a bounce. But the weekly chart is just saying, just be a little bit careful for the moment because there could still be some selling pressure about. So now I'll just very quickly move on to the Aussie dollar. So here we have the Aussie dollar. Again, on the weekly chart, we're showing you here. And I showed you this last week. Not much has changed. We've got this big wave down. I was showing you the sell zone there, worried about the fact prices could turn down, and they really have. And the weekly trend is now down. You can see there. And last week, after an attempted rally over a couple of weeks, it turned back down. So the selling pressure was around. We've got iron ore collapsing. So we basically got another weekly sell pivot last week within this weekly downtrend. So it's not looking that great for the Aussie dollar right now. If we do break below those lows, it could accelerate to the downside towards that target around 68 cents. And I think if you look at the iron ore price, our terms of trade weakening dramatically. So I think the Aussie dollar is going to be in for more selling pressure. And that really is a sign of risk off as well. If you look at the Aussie yen, the Aussie dollar, when that starts to really tank, that's often offshore selling, selling our stocks as well, when you've got a bit of a de-risking event. So commodities sort of rolling over a bit, especially iron ore space. So you've got multiple things putting a bit of pressure on the Aussie dollar. And I just don't think that selling pressure is over yet. And looking at gold, not much has changed again, but just to follow on from what I keep saying with gold, it's still looking a little bit bearish to me, even though it's currently sitting, if we're just looking at this long-term trend that I've shown you, which has happened for the last few years. I'm just looking at this most recent wave, looking at the sell and buy zones of that wave, where the buying and selling pressure should be. And we've already seen the selling pressure happening quite a bit in this last year. Now, prices are bang on the point of control. So, it's right at that point of indecision for everyone. The bulls are unhappy and the bears are unhappy at the moment. But just the overall chart to me is saying that lower prices could be coming, and I really need to see it back above 1840 before I'm going to get bullish on gold again. The weekly trend down, not much support below here. We've got the weekly sell pivot in place, the first weekly key bar, and you should be watching these videos to know what that is. But just saying that the trend to the downside is marching forward. The selling pressure is still there, and still concerned what happens beneath that 1680 level. I think it's a quick trip down into that buy zone if we do see prices break down below there. So for me, I'm just a little wary of gold. But oil prices are a very different story indeed. We're seeing lots of strength. I showed you last week the way gas prices were moving and followed up with the oil price saying it was looking pretty strong. It's had a good week this week, well, to Thursday, that is, and looking to me like it wants to bust out to the highest price in the move so far. So I just wanted to show you the setup. We've got, again, the large sell-off from 2019 to 20, and we're right up in that sell zone, which I've shown you before, of that whole wave. And we've seen a bit of selling pressure for the last 6 months where you'd expect to see it, but it hasn't done much damage to the trend, to the upside. And it's a very significant trend that we're seeing, very strong, but we've just had another bit of weakness the last few months. And here we are racing up towards the highest price in that move. And I'm interested to see what happens to oil if it does bust out above there. I think it could extend to the upside to carry on that uptrend. And we have the high of the move from a few years ago up around 87 bucks. So it could be a pretty quick trip over this next month or two up towards 87 bucks for oil. And as we head into winter in Europe, we already have low gas supplies over there. If it's a cold winter, we could imagine that oil prices will get a bit of a kicker. And we are seeing a bit of movement in those oil and gas stocks. So I'll just finish up with a couple of stocks to show you. Right, so this is Woodside Petroleum. Now, this is a member of the Pivot Trader portfolio. We've been buying with this takeover that's happened, and it's created a lot of weakness, but gas prices going through the roof. And look, their gas contracts are usually based off oil, in fact, and long-term contracts they are too. So the fact that spot gas prices are going vertical isn't necessarily helping their P&L, but it is giving you a sign of what's going on in the gas LNG markets out there. And we've had the big sell-off in Woodside on the back of the BHP merger. I think a lot of the fund managers wanting to get out of the oil and gas space altogether and dumping, there was a lot of fear about, which really pushed Woody's price down. But we've got gas and oil prices going vertical. So there's a point where I think this thing's going to reverse. And if I just look at the long-term picture, I think I've shown you this before, but if I'm looking at just the most recent wave to the upside, which was in 2000 to 2007, you can see quite clearly that prices have been big buy zone that's been there. This is, multi-decade chart we're looking at. It initially bounced off the top of the buy zone there, back to the point of control of the whole wave. And then it's had another wave to the downside, and it is trying to recover from there. So we're right in the middle of the buy zone in the big picture. But in the short term, I just quite like the look of this on a weekly chart. If I'm just looking at how these things turn around, and I'm showing you these waves that occur, and each wave, we look at each wave and have a think about where the buying pressure comes in. And you can see there the buy zone of that wave coming in there, prices coming in, bouncing out and taking out the high. And then we've had another sell-off and we've come back to the buy zone. We've got a nice weekly buy pivot, signs of things turning around. And this week is seeing some strong buying pressure with oil prices picking up. So what we're seeing there is potentially the beginning of a U-turn, aren't we? Potentially the beginning of an uptrend where we've got these first waves in that uptrend, and we've got the corrections that are occurring. So if prices turn up from here, and especially, take out that high at 28 bucks, Woodside's going to look pretty fabulous indeed. Beach Energy has been pretty beaten up, that's for sure, but they will end up benefiting if LNG prices continue to hold strong and oil prices are doing well. And if we just have a quick look at that structure, we've got pretty clear indication from 2016 to 2019, massive wave to the upside. We've done a bit of work, got smashed down into the buy zone, buying pressure there back in 2020. And then we've had another wave to the downside here, and just trying to find some buying pressure. So it's a bit early in Beach. It looks terrible when you look at it just at the chart. But when you think about it in terms of these waves, if I just look at this down wave and we only analyze that, you can see that we had this massive crash in the price, and we've had a rally back to the point of control, back to that midpoint, selling again, right down into the buy zone. If things can turn back up from here, that's going to look like pretty good buying in 6-12 months. And, you know, if it fails back below those lows around 90 cents, 80 cents, it's looking terrible, and you'd have to run away. But that's just two little stocks there for you as oil prices look like they're about to blast off, that I think could do pretty well. So that's enough for today. I will definitely come back with more next week. Click on the link below the video there just to check out what I'm doing. My service, Australian Small-Cap Investigator and Pivot Trader. If you're a technical analyst, get into the Pivot Trader. That's a bit more of an expensive service. Or just if you want to tip a month in the small cap space, exciting little companies that I think are going to do well over the next year or two, join Australian Small Cap Investigator for under $100 for a year. So that's not too bad. All right, well, I will come back with more next week.